Hello everyone. Welcome to the video of mutual funds. As you all know, mutual funds is a better way of investment. It is a financial intermediary which bring a wide variety of securities within the reach of the most modest of investors. Mutual fund is organized in the form of a trust that helps in pooling of savings of common investors where they are not able to invest in blue chip companies. So in this video, we will go through the introductory part of mutual funds comprising of the meaning, the features, the significance, etc. A mutual fund is a financial service organization that receives money from shareholders. They invest it, earns a return on it, and agrees to pay the shareholders cash on demand for the current value of his investment. For instance, assume we have an investor named A. Mr. A is a common man, he's not very rich. He has some savings in his hand. He has an interest in investing his savings in one or the other form. He is unaware of the investment avenues. Then he comes to know about mutual funds. He invests his nominal savings in the mutual fund. Say for instance, we have another investor, Mr. B. He also has the same situation. So a number of investors like A, B and C, they pool their savings together and they invest it in the form of a trust. They keep or they give their money, their savings to the trust, and this trust is known as a mutual fund. I repeat, mutual fund is in a form of trust. It may be an institution. So as I told you, it pulls money from many investors and the money is in the hand of mutual fund companies or institutions. So what do they do with this money? They use and utilize this money to invest in different avenues like shares, bonds, money market instruments, or any other securities or assets, or it may be a combination of all these investments. So, do you know what is the reason behind doing like this in a combination of investments or in different investment avenues? It is to reduce the risk of the investors. So, your money, other investors' money, they are pooled together and it is kept in the hands of mutual funds and they invest it in assets like stocks, bonds, etc. So this is the workflow of mutual fund, how it happens. So this is the investor. The investor pools money with the fund house, that is the mutual fund. The fund house appoints a fund manager to supervise and manage all these funds, and the fund manager invests the amount of money in securities like stock, bonds, gold, or any other portfolio of investment. And this investment generates a return after some point of time, and after some time it is passed back to the investor and the investor gets an earnings. So this is how mutual fund works. So we will learn more about the working of a mutual fund in the more videos to come forward. In India, mutual fund is regulated by the Securities and Exchange Board of India, that is SEBI. Before moving to the features of mutual fund, SEBI Regulations Act of 1996 defines mutual fund as a fund established in the form of a trust to raise monies through the sale of units to the public or a section of the public under one or more schemes for investing in securities, including money market instruments, gold or gold related instruments, or even real estate assets. So, I hope you have an idea of mutual fund. What is mutual fund and how does it work and all. So, now we'll move to the features of mutual fund, which is very easy to understand if you have understood the concept of mutual fund. So, as I pointed out earlier, mutual fund is a financial intermediary between the common investors and the investment avenues, and it is organized in the form of a trust. And here, in the case of mutual fund, the ownership is proportionate. So, in the case of shares, in the case of stock, so if the investors invest some amount of money, they have shares in their hands. They purchase shares, equity shares or preference shares. In the same manner, when the common investors invest money in the mutual funds, they hold units of mutual funds or they purchase units of mutual funds. And also after the investment, they get a particular returns, and the fund which is invested by the investor is managed by fund managers or the portfolio managers, and they are obliged to redeem the units on demand. So the returns, or what is more important here, is the net market value of the investment or the net asset value of the investment. Okay, so units are dealt on the basis of this net market value of investment. So now, what is the significance of mutual fund? What is the need of mutual fund? So basically, mutual fund, it offers an opportunity to invest in a diversified basket of securities at a very low cost. The mutual fund institutions or the trust, they only charge a small amount of money as a management fees. Other than that, there is no cost in the case of mutual funds. So there is diversification in investment. That is one of the most important significance of mutual funds. And since there is diversification, it helps in the growth of the economy of the country. And also, as I mentioned earlier, small investors like Mr. A, Mr. B, and Mr. C, they get to invest in the blue chip shares, which is not possible in the other cases. And the channelization of resources happens here. Then we get price sensitive information investing in the mutual funds. And it is also a very good investment for the retired persons and pensioners, conservative investors, etc. So we have understood what is the significance of mutual funds and what are the features of mutual funds. And later on, we'll discuss about the merits or the advantages of investing in mutual fund, and also what are the disadvantages in investing in the mutual funds. And another main significance of investing in mutual fund is related to the risk factor. So in the case of mutual fund, let's assume we invest our money in shares, bonds, and also in gold. If any one of the investment avenue is in loss, we are sure of the other two investment revenues. The risk is limited to only one source. But if we invest all our money in equity shares, and if that share is running in loss, we lose all the money sometimes. So it is also helpful at the time of management of risk. So in the more videos to come, we'll discuss more about mutual funds and the different types and schemes of mutual funds, and the types of mutual funds that we see in India, along with some other activities. Thank you.